Johan, let's start off with gold. We've seen big moves this week. I mean, I think it hit $1,131 an ounce earlier in the week, and now we're currently at around $1,107 an ounce. So quite a bit of money coming off the table there.
Yes, it would appear that the investor interest has gone down a little bit. Also it's a dollar play, to be very honest, and we see the dollar strengthening currently on the concerns coming out of Europe again on Greece, etc. So very much driven by dollar and investor demand being the key here.
What's going to drive gold higher from these levels? Because it's sort of finding resistance at around 1,130.
Longer term it has to be prospects of inflation coming through as part of, when economic growth kicks in. So the question is when that will happen and how much.
Yeah, when is that going to happen, Wayne?
Look, there's no inflation this year. And that's one of the things that makes me very wary about gold and the gold shares. And that's only short term, I must stress that. If I could only make a decision today on a 5-year view, I would buy gold shares. Because I think on a 5-year view, you're going to make serious cash out of it. But in the interim, there's no inflation out there. And you take South Africa, put aside the Escoms and the tariffs, the administrative prices. There's no demand, there's no growth in money supply. It's the same overseas. There's massive capacity. No one can put up prices. So there's no chance of inflation this year. Next year is a completely different story because I believe eventually these low interest rates will work domestically and globally, and that will cause excess demand, which will push inflation. So maybe gold runs next year. But I just can't be positive this year with quite frankly, zero inflation worldwide.
Well, Johan, it's interesting because we know that gold will rally in an inflationary environment, but if we do see interest rates being hiked in the US in particular, we know what that does to the gold price, and it was proof in the early 80s when gold rallied to over $800 an ounce, and suddenly when interest rates were hiked in the US and gold plummeted.
Yeah, it's, again, there's a number of issues that work on the gold price here. So, it depends. We've seen this week, and again, I agree with Wayne, it's a short-term thing, but we've seen the correlation between gold and the dollar, which was, for the past while, about 70% come down a little bit. So, it's going to be a mixture of factors. But, in an inflationary environment, the thinking is that gold obviously will attract attention.
Of course, we know a massive interest in ETFs. Also, scrap gold has also started to make a few headlines. A lot of selling of scrap gold. So we're seeing the market being flooded with that. So that could impact prices negatively, Johan.
It could. Now, what is interesting in terms of physical gold, we do see that when prices go down, we see increased buying. And we have seen increased numbers, imports from India, Turkey. So what we see on the short term for gold, we think there's a floor, which if prices were to go lower, you will see physical buying, and then clearly capped on the top side by the question around investor demand.
Do you look at the physical markets, Wayne, at all?
No, we don't deal in the physical markets. I mean, we obviously have owned ETFs, and we have on occasion owned physical gold. We more make a view and deal in the actual shares. But gold's a large part of gold is a commodity like anything else. When the price goes up, demand tends to fall a little bit. But we are in a good spot for commodities in general. I'm just worried that no inflation is going to drag on gold. And of course, the gold shares, which is more important for us, the gold shares themselves have got a lot of good news already in the price of gold. I mean, I don't know the exact numbers, but I would think the gold mines are making a small profit at the current level. Nothing great. They're not making a decent return on capital. But yet the share prices have actually still relatively high. So I must say, and I've said it plenty of occasions, gold shares do worry me a little bit now. But not in a 5-year or a 3-year view, but in a 1-year view, yes.
Johan, looking at platinum, because it's also interesting, we're seeing a lot of demand, investment demand coming through from platinum. It's now starting to make headlines in terms of jewelry, and auto catalyst sector has been there for quite some time. But also just interesting to note that many say that platinum should be catching up to gold, should be catching up in terms of the increases that we've seen on the underlying metal. But when is that going to happen? What's going to push platinum higher from these levels?
Well, you see, again, as we said before, platinum is slightly different in that it's a bit of a hybrid, if you like, in that it's linked to gold from an investment point of view, but platinum may be more strongly linked to actual usage of platinum. So we're going to see, I think, 3 factors being supportive of platinum. The first one is purely economic growth. When that kicks through, it should be increased demand. We are going to see more interest in the ETFs, which we currently see out of the US, small growth over the past while. And then obviously local factors, South Africa being by far the biggest producer of platinum. Any concerns that we could have here around power, electricity, that sort of thing is also going to support prices. So on the premise of economic growth kicking in on a broad scale, that is going to push up platinum.
Johan, looking at the oil market as well, OPEC not changing production levels on Wednesday. So some say oil prices looking slightly overheated. Is this your view as well?
No, we don't think it's overheated. We think it's pretty much where it should be. And OPEC has also said the same thing. They said the market is a happy place at the moment. Prices are nice and high. You know, they said quite a while ago what they're looking for is a 70 to 85 band, which is we're getting there. We are seeing stocks going down very slowly. So we think the market is actually at a very, very healthy place.
All right, looking at the overall commodity space as well, euro dollar obviously playing quite a big role going forward. Are we going to see a volatility continue from these levels?
Yes, most certainly on the short-term basis, very hard to say what's going to happen. You can even look on, intra-week, the market going up and down, up and down. On the broader scale, it is, the main themes, the economic growth, expectations thereof. On base metals, for instance, we are starting to see signs of growth coming through not only from China, but from the US and Europe as well. So it's those issues that's on the broad scale is going to drive prices.
Which metal are you the most bullish about?
At the moment, aluminium has to be the star, because aluminium and then nickel following shortly, because they are very much tied into manufacturing and growth, etc. We are going to see, we think, a slight divergence between the various metals. But those two most certainly promising, and then copper as well.
Johan, thank you very much for your time today. That was Johan Marie from Absa Capital. Wayne, let's just look at the markets today, because we under pressure. Futures close out yesterday in what many are calling the futures hangover, and in the US, even though we bucked the trend yesterday, we were up quite significantly.
Yeah.
Today, pressure coming through from the US because of quadruple witching.
A little bit of pressure. Look, you got to wait for all the market to clear itself before you know whether there's been an influence by the futures market or not. But yesterday, quite clearly, some shares were pushed seriously there, and only because of the futures.
I think was up over 5%.
Yeah, now some shares were pushed there. The Impala was pushed, platinum shares were pushed. You can even maybe argue that some of the banking shares were pushed. I mean, in essence, it was in someone's best interest to actually push the market up, and today's 1% fall is quite normal for this to happen when your futures day was a big positive day. It doesn't always have to be. I mean, I hate people to think that every time there's a futures close out, the market goes up. But it's a big volume day. But if someone's getting a bit squeezed there, they will use big cash to push the market in their way. And if that's up, the next day you're down. If it's down, the next day you're up.
Aveng down 5.3%. Yes. Liberty Holdings loss of 5%. Mondi down 3.3%. Investec today but 2%. Top of the top 40. Remgro a gain of 2%. So just some interesting companies there. Your view on Aveng coming down so significantly?
Look, I don't know why Aveng is coming down. I mean, it is a little bit concerning, because their last set of results, okay, they weren't great results, but they weren't much worse than what the market was anticipating. And of course, understand with Aveng, they've got serious cash on their balance sheet. They've got, I mean, it must be about 20 or 25% of the market cap is actually in cash. Now, of course, their businesses have been affected by what's happened in the world, but it's cyclical, it's going to turn. I must say, I find it most unusual that they're actually falling. Now, I don't think it's right, but maybe it gives you a chance to buy a good company cheaper. We're certainly going to go buy some more at these lower prices. Certainly will.
And of course, Investec came out with their trading update today, earlier this week, so up 2% there.
Yeah, but Investec looks quite nicely priced at the moment, actually. It doesn't look bad. Liberty, I must say, Liberty also looks like a cheap share, Liberty Holdings, but I mean, it doesn't stop it coming down.
Some opportunities to buy.
I would think so, but I mean, it's very difficult to justify an overweight position in shares now, given the run. I mean, we've seen a little bit of weakness today, but this market's still over 28,000. Yeah.
Looking slightly overheated, some say.
Possibly. Look, I wouldn't subscribe to massively overvalued, but the risks start multiplying from this level onwards, and that's what investors must be cautious about.